So it looks like they avoided the worst case scenario. We were talking about going into the storm. The industry was talking about $100 billion worth of insured losses, which would have made it the worst storm ever. That was predicated on a direct hit into Tampa Bay, which really didn't happen. So that was the good news. The bad news is it's still going to be a large insured loss event. Now, the other good news for the large national carriers, and we kind of talked about this before, is they're just not big players in that market. So companies like Travelers, Chubb, AIG, Hartford, they're not major players in the Florida home market. They will have losses from this, but much less than we initially anticipated. I come to like a midpoint of maybe 5 to 6% of annual EPS taken out from the storm.
What do we think the insured losses actually will end up being, if not $100 billion?
So it's super early, Paul, but I mean, just back of the envelope, we're kind of looking at maybe 10 to 50 or something like that. Like it could be on top. Hurricane Ian 2022 was 65. The early reports I'm hearing is the surge in Tampa was actually less than even Helene. Right. So it was less than Ian as well. So it could be lower than that 65, but it's still early, and you've got the Helene damage on top of it.
So how does it work then with premiums? I mean, we're used to hurricanes, right? So like, do premiums for insurers or reinsurers wind up going up? Like, how does that work, and what's the immediate reaction?
So you got a bunch of dynamics in this. Home insurance premiums going up anyway, right?
For everyone?
Pretty much for everyone. That's been happening for a while now, and that is cost of materials, the frequency and severity of storms nationwide anyway. Severe convective storms, kind of strong hail, stuff like that. So it's not just hurricanes. So that has been driving home insurance prices up anyway. Reinsurance prices of insurance for insurance companies have been going up anyway, which drives it up as well. What I think will happen, and I don't exactly want to make this call, but there's going to be demand surge, meaning there's going to be a huge demand for building materials, and that is going to push up costs across the country as well. So that'll feed into price. So there's a bunch of upward things pushing on home insurance prices.
I don't know. It just feels like we've had a lot of storms, and I know the season was actually pretty calm until just recently. Then I go look at the S&P 500 Property and Casualty Insurance Sub-Industry Index, and there is such a thing on the Bloomberg terminal. It's up 38% year to date. Yep. These insurance stocks are doing well. What's going on there? What's the call?
Fundamentals still good for them. And we expected a busy hurricane season. Kind of new conditions were conducive to that happening. And there was a lot of formation. There weren't a lot of big landfalls. But these stocks, they're defensive, so it's like kind of when you get worried about the economy, they do okay, but then they can also benefit from the economy. So they're a nice play on both of those things. Interest rates going down is less of an impact on them than other financials. It's not great for them. It helped them a lot. But if you have to own financials, they're less sensitive to interest rate moves. So there's a bunch of positives there. I see fundamentals probably peaking. So, we might be at that point, but still good fundamentals.